This is your LMAX exchange technical update for Tuesday, January 10th, 2017. Euro dollar. So the euro has seen a bit of a correction off the recent 14-year low at 103.41, and there is risk for additional upside before the market looks for that next lower top ahead of a bearish resumption. Ultimately, the downtrend here remains firmly intact on a medium-term basis, and so any rally should be very well capped with only a break back above 108.75 to take the pressure off the downside. A break back below 103.41, that recent 14-year low, will open the door for fresh downside towards next key support at parity. Sterling dollar. So cable remains under pressure, with this market now focused on a retest of critical support at 120.82, that low from the 25th of October, which guards against the critical October low, that plus 31-year low, or that plus 30-year low at 118.40. At this point, it would take a break back above 127.96, a previous base, now turn resistance, to ultimately force a shift in the structure, while any rally should be very well capped. On a short-term basis, if we see a pushback above 124.31 about, that would take the immediate pressure off the downside, but again, ultimately a break back above 127.96 would be required for a structural shift, and until then there's risk for deeper setbacks. Dollar yen. Dollar yen is trading within a bit of a correction now after rallying up to fresh multi-day highs at 118.67. There is risk for a bit more of a correction to the downside. A break and close below 115 would strengthen that outlook and accelerate declines potentially back towards the 111 to 113 area, but ultimately here the constructive bias remains intact, and the market should put in a higher low ahead of fresh upside beyond 118.67 and through 120 further up. Euro Swiss. So not much going on with Euro Swiss, but overall the pressure here remains on the downside, and the market is expected to gravitate lower towards a retest of that 2016 low at 106.24, with only a break back above 109 to take the pressure off the downside. Aussie dollar. So Aussie has seen a nice correction over the past several sessions, with the market stalling out after the market stalled out just shy of key medium-term support at 71.45, but here the structure does remain bearish, and this rally is classified as corrective, with a lower top sought out somewhere ahead of 75.25 in favor of that next downside extension below 71.45. Dollar CAD. So dollar CAD setbacks have stalled out by a key 78.6 fib retracement off of the recent 130.80 to 136 move. At this point, it looks like the market could be putting in a higher low somewhere in this recent support that we saw down around the 131.75 area, ahead of a next upside extension back above those highs that we saw, those recent highs around 136 and towards 140 further up. Ultimately, it would take a break back below 130.81 to compromise the constructive outlook. Kiwi dollar. So Kiwi seems to be continuing to put in a major top after stalling out in 2016, just shy of 75. This latest corrective rally should put in a next lower top somewhere ideally below the previous lower top that we saw around 72.40 in favor of that next downside extension below medium-term support at 66.76. SPX 500. The S&P 500 has recently put in a record high, and while the market holds above support on a short-term basis, support which comes in around 22.32, the constructive outlook remains firmly intact, and there is risk for additional upside beyond the recent record highs and towards 2300 further up. If, however, we see a break and close back below 22.32, this could set the stage for the onset of a short-term correction, while a break back below 21.80 or 21.80 would be required to force a more significant shift in the structure. Gold. So gold continues to bottom out after putting in a low around 1122 several days back, and at this point the market could be putting in a longer term base after being supported by critical support in the 1120 area, and this opens the door for the possibility of a resumption of the gains as this longer term base carves out back towards and above the 2016 peak at 1375. Right now, close back above 1200 will do a good job of strengthening this basing constructive outlook for gold. Only back below 1120 would compromise the constructive outlook.